All right, good day. Hope that you're doing well. So in this video, we're going to be doing the previous question paper based on accounting, right? So the 2022 paper. Now, starting off with the first question, which is bank reconciliation. So now 1.1, we need to choose the correct concepts for these given statements. Now, the first statement, 1.1.1, says a balance on the bank statement. It's an unfavorable balance. Now, on our bank statement, right? Remember, right? So let me just try and show you this. So remember in our bank account, right? Our bank account, it's an asset account. As a result, it increases on the debit side and it decreases on the credit side. This is our bank account, right? Now, the bank statement, which is the corresponding account for this bank, right? So on our bank statement, remember, this bank account is an asset, but in the books of the bank, right, they regard us as a creditor, right? So we are not the assets of the bank, right? In our books, this bank account we regard it as an asset, but in the books of the bank, they regard us as a creditor because why? They have our money. So as a result, right? So if I have my opening balance on the debit side of my bank statement, of my bank account. On my bank statement, this balance is going to be on the credit side. This would be the corresponding credit for my debit, right? And as a result, my bank statement would increase on the credit side, right? So always in our bank account, right, we increase on the debit, decrease on the credit. In the bank statement, we increase on the credit side and we decrease on the debit side. Now, always keep that in mind. So here, to answer the first question, on the bank statement, an unfavorable balance would be a debit balance, right? Hence, I've increased that on the bank statement. The debit would be a minus. Now, the second question, interest charged, interest credited on the bank statement is recorded in there. Now, remember, our bank statement, as I've said, it increases on the credit side, right? And if we say an interest is credited, meaning that it's on the credit side, this is interest income. And as a result, because it's an income, we would need to recognize it in our CRJ. Now, 1.1.3, service fees and ATM deposit fees are added and recorded as bank charges in accordance to the concept. Now, in accordance to the materiality concept, right? Materiality simply explains to us that those transactions which do not have an influence or do not affect the decision making, they mustn't be recognized separately, right? So they must be grouped into a single group. So for example, purchase of a fixed asset, that kind of a transaction may affect decision making. So hence we show it separately, right, on our fixed asset node. Now these small costs such as bank charges, credit card levies, so because these costs, they may not necessarily influence any decision and we're going to group them as our bank charges, right? So as a result, we're going to classify them as our bank charges instead of recognizing them separately in our books. So this is the materiality, right? A is used to buy goods or service from a supplier and the amount used is paid back to the bank at a later date, right? So this is basically your credit card. When you're using your credit card, you can take things now and then you can then pay them off later, right? So credit card. An unfavorable balance to the bank is an to the business, right? So what is an unfavorable balance to the bank? Basically, this is a negative balance. And as a result, remember, we have used more money than we have, right? So meaning that we would need to pay that money back. So this becomes a liability, right? So an unfavorable balance is always classified as a liability. And in your books, to be specific, under your balance sheet, this unfavorable balance under your current liabilities, you would classify it as bank overdraft. Now, let us move on to the next question, 1.2. Now, use the following information taken from the account records of member traders. Calculate the correct totals for the cash receipts journal and cash payment journal. So now, we need to calculate the correct totals for these two accounts, taking into consideration the transactions they gave us. Now, let us look into those transactions. Now, we need to adjust these balances for the month of June. This is important. So we're preparing them for the month of June. So now this is that we're going to use the following information, which is on D, right? So information, this is the following items appeared in the bank statement, but not in the cash journals for June, right? So now how can we go about fixing that? So now here, first thing first, EFT number 201 and 220. So let me see those EFTs. So 201 220. So when it comes to outstanding EFTs and outstanding deposits, the question that you need to ask yourself, in this case, can you see that we are preparing these statements on a monthly basis? So this is the information for the month of May. So now we are trying to adjust these balances, right? Remember, these are our balances on 30 June. So we are correcting the balances for the month of June. Now, always take this into consideration. Your outstanding deposits, right? Outstanding deposits as well as outstanding EFTs from last month, right? This is important. For the previous month, so always your outstanding deposits as well as EFT for the previous months, you do not recognize them. You're going to ignore them. Why? Because we already recognize them on those previous months. For example, in this case, for the previous month, which is May, these deposits as well as EFTs, we already recognize them, right, on that month. Now, if you're going to recognize them again on June, you would be doubling them, right? So as a result, hence we're saying outstanding deposits as well as outstanding EFTs for the previous months, you always ignore them. But with regards to your outstanding deposits and outstanding EFTs for this month, you are going to recognize them. So here, these, you're only going to recognize them if these are for this month. And to be specific, if these outstanding deposits and outstanding EFTs, they were for the month of June, this is when you are going to recognize them in your books. Now, these outstanding EFTs we are given, they are for May, right? So as a result, we're not going to recognize them because we already did recognize them on the month of May. So now let me look into the next transaction. A deposit of 8.8. So this one, we are done with it. And as I've said, because this is for last month, we're not going to recognize it. Now, a deposit of 8.8. So this is an outstanding deposit for last month. So we're also not going to recognize it, right? We're interested in outstanding deposits and outstanding EFTs for the month of June. Now, a direct deposit of 3.5 was made by a tenant for her July 2022 rent. Now, this is not an outstanding deposit or an outstanding EFT for last month. As you could see, this is not present here. So now, this direct deposit of 3.5, remember, we are receiving money, right? And when you receive money, where would you recognize those transactions whereby you're receiving money? In your cash receipts journal. So here, I'm going to add the 3.5. And we are done with this transaction. Now, bank charges totaling to 260. Now, bank charges, they need to be paid. As a result, I'm going to classify them under my cash payments journal. So here, plus 260. So I'm done with my bank charges. Now, a debit card payment of 250 to purchase new windscreen wipers for the vehicle, right? So here we paid using a card, to be specific, our debit card, right? And we paid 250. As a result, I'm going to classify these transactions under As a result, I'm going to classify this transaction under my cash payment journal. Now, interest on credit balance of 52 rands. Now, remember, if these appeared on the bank statement, right? Remember, what did I say with regards to the bank statement, right? Our bank statement, so let me just rewrite this here. On our bank statement, the credit side is a positive balance for us, and the debit side is a negative balance. This is on the bank statement, right, in the bank's books. Now, as a result, when they say interest on credit balance, it simply means that this is interest on a positive balance. So as a result, this 52 rands, it's interest income, meaning that I would need to recognize it in my cash receipts journal. So here, I'm going to add the 52. Right. Now, let me look for other transactions which may affect my cash receipts journal as well as my cash payment journal balances. Now, information E, the following items appeared on the cash journals but not in the bank statement. So information E, we're going to use it when we're preparing the bank reconciliation statement. Remember, in the reconciliation statement, this is where we show or we rectify the mistakes which were made by the bank, right? Here, we are rectifying those mistakes which were made by us as a company. So here, this information, I'm going to use it when I get to my bank reconciliation statement. Now, F, the following errors were noted when preparing the bank reconciliation statement for July. Now, what does this mean? This simply means that these errors, right, were taken into consideration when they were preparing the bank recon statement. So as a result, they were only accounted for in the bank reconciliation statement, meaning that in our books, we did not take them into consideration, right? Because they were noted when preparing the bank recon. So you need to ask yourself, meaning that these transactions would affect our books, which is our CPJ as well as our CRJ journals, right? So these would affect our books. Reason being is that they were noted, right? They took them into consideration while preparing the reconciliation statement. So as a result, these errors are only going to affect our books. Now, EFT number 178 was incorrectly recorded in the CPJ, right? So basically it was incorrectly recorded. The correct amount is 2.3, right? So now let me go look into the EFT 178. Can you see? We said it was 5.9 in our books. This is the error we made. But here they're telling us that the correct amount, right, it's supposed to be 2.3 in the CPG. Can you see that we overstated this amount, right? So the difference between the two amounts, 5.9 minus 2.3, is 3.6. We said we paid 5.9. In actual fact, we were supposed to record 2.3. Now this 3.6, I would classify it as an income, right? So, cause why? Remember, if I wrote that I paid 5.9 and I was supposed to pay 2.3, right? And I was supposed to pay 2.3. The difference between the two, I can classify it as an income in order to adjust my balance, right? In order to adjust this transaction. So here, the difference between the two, which is 3.6, I'm gonna add it here as an income, right? In order to rectify that mistake that I've made in my cash payments journal, right? Because I overstated this amount of 2.3, right? I overstated it by the 3.6. So hence I'm canceling out this 3.6 in my CRJ. Now, the last transaction, EFT number 225 was incorrectly recorded in the cash payments journal. Now, this is also a transactions that we recorded incorrectly in a cash payment journal. Now, the correct amount is 10,450, right? Now, this is the EFT. Now, 10,000, let me see the correct amount. 450 is the correct amount. In the CPJ, we were supposed to classify the 10,450, but we recognize this as 5.5, meaning that we understated this amount, right? So now if I were to get the difference between the two, it would be 4,950, right? So this 4,950, I'm gonna add it on my CPJ, because why? I understated that amount, 4,950. Now remember, the 5.5 is already there. So now when I add the 4,950, this would amount to the total, which is correct, of 10,450. Now I'm done with my cash receipts journal as well as my cash payments journal. Let me recognize their respective balances. So here, if I add these values, 20,420 plus 3.5 plus 52 plus 3.6, my correct CRJ balance should be to 27,572. Now this is the correct balance for my June, right? For my month of June. Now, for my cash payments journal, 29,070 plus 260 plus 250 plus 4,950, the correct CPJ balance for my month of June, it will be equals to 34,530. And this would be your complete adjusted balances for your CRJ as well as your CPJ for the month of June. Now, let us move on to the next question, whereby we are required to prepare the bank reconciliation statement. All right, now 1.2.2 wants us to prepare the bank reconciliation statement. And remember, on the bank reconciliation statement, this is where we rectify those mistakes which were made by the bank, right? So the first line item, right, that you need to recognize in your bank reconciliation statement is your balance as per bank statement. Remember, for the month of June, right, to be specific, the balance on 30 June 2022, because why? We are correcting that balance, right? So balance as per bank statement, right? So meaning that this is the balance on our bank statement. And now information BT, the balance on the bank statement on 30 June 2022, which is what we're looking for, was 11,892, right? Now favorable. Remember, in the bank reconciliation statement, the credit side is a positive balance and the debit side it's a negative balance. So this simply means that this is a credit balance and you need to indicate that credit balance as per bank statement. So as a result, I'm going to classify this because it's a favorable balance, meaning that it's positive on the credit side, 11,892. Now, let me look for transactions that relates to the bank making the mistakes. Now, information E, the following items appeared in our cash journals, but not in the bank statement, right? Meaning that the bank omitted these transactions. Now, EFT number 250 for stationary board and EFT number 251 for petrol for the owner's private vehicle worth 2.3 and 1.7. Now, these are outstanding EFTs, right? And because these are outstanding EFTs for the month of June, which is the month I'm preparing my statements for, I would need to recognize them in my books. If these were outstanding EFTs for the previous months, which are these, I was not going to recognize these in my books, right? So now here, I would say outstanding EFTs. I have outstanding EFT number 250. So I'm going to try and squeeze it there. Okay, let me write it here. So the first one is number 250. The second one is number 251. So my EFT number 250, remember EFTs, payments, they decrease our bank balance. So as a result, they need to be recognized on the debit side of our bank reconciliation statement. EFT number 250 here. So EFT number 250 here, this is 2.3 So let me write this using a different marker, 2.3. And EFT number 251, 1.7. All right. Now let me look for the other information that the bank omitted. So now here, an outstanding deposit of 750 from a customer. Now this is an income, right? So as a result, we would need to classify it on the credit side. And because this deposit is outstanding for the month of June, I'm going to recognize it in my books, right? So now outstanding deposit, and my outstanding deposit is 750, should be on the credit side. All right. And these are all the transactions that the bank didn't take into consideration, and we have recognized them in our books. Now, what is the remaining step here? We need to balance out this bank reconciliation statement. So between the credit side and the debit side, as you can see that the credit side is greater than the debit side. Therefore, I would need to write down the balance of my credit side on both these columns. So if I take 11,892 and I add it to 750, I would get 12,642. So remember, I need to write down this balance both columns. Right. Now, to balance out my reconciliation statement, right? So as you could see, I'm gonna balance it here on the debit side. It needs to be the debit side is the side that needs to be adjusted. So here I'm gonna say debit balance as per bank account, right? So debit. So this is always our balancing figure, right? So you would always need to balance your books out by this last transaction. Debit balance as per bank account. Bank account. Right. Now, debit balance as per bank account. So I'm going to take this 12,642. I'm going to subtract 1.7. I'm also going to subtract 2.3. And doing so, my debit balance as per bank account would be equals to 8,642. Right. And this would be my debit balance. Right. Now, that'll be all for this video. Remember, the purpose of this video was preparing your bank reconciliation statement as well as adjusting your CRJ and CPJ journals. Right. So remember, if ever you have any questions, always feel free to reach out. Thanks.